Let's talk to Craig Erlam. He's a senior market analyst for OANDA. Very good morning to you, young Craig.
Good morning.
Right, here we are. We've got a slide. The Great British Pound, and I say that in capital letters, against the Japanese yen. This is becoming your trademark, is it not?
It would appear like a yen pair right now. I think we've gone around the houses now. We've come back to pound yen. I just think that a lot more interesting than a lot of other charts right now. There are a lot of other charts, you can get some quite choppy action. Euro sterling is a prime example of that. I try to look at a chart which is expected to be volatile as well as having some nice volatility. So today when we're looking at the pound, for example, we had inflation data yesterday. About 10 minutes ago we had jobs data. Tomorrow we've got retail sales and we've got Bank of England as well. So I like to look at charts which are interesting as well as have some scope to be volatile.
So you're mixing the fundamentals and the technicals?
Yes, I mean ultimately, if you've got a strong fundamental environment, it tends to bode well for technicals because traders like volatility.
So do the fundamentals lead the technicals, or the technicals lead the fundamentals?
Fundamentals lead the technicals, but technicals respond quicker than most people can explain it and then trade fundamentally. I guess that's what a technician believes. If everything's priced in, then something that happened 5 minutes ago, like the jobs data, is now priced in more often than not, or at least to a greater scope. So you tend to be looking at a chart explaining what's impacted it, and then you're using chart levels to try and decide what impact future fundamental events, known fundamental events, like tomorrow's Bank of England meeting and retail sales data, and trying to look for signs as to what that could do to the chart going forward, but also what levels are key heading into these events. So we look at the data we've had already this week. We've had inflation data, which was softer than expected. Now, people may look at that and think, well, what does that mean for Bank of England interest rate expectations? Because the Bank of England seems so keen to raise interest rates in May. And we look at the charts and we had this brief dip in the pound, but it recovered quite quickly. And despite the fact that I think we ended the day a little bit lower than where we were pre-data, that would suggest that despite the initial dip, traders aren't really looking at this data and viewing that as making a significant difference to what the Bank of England's going to do. So there's messages within the charts which can be gauged through this technical analysis. And we look at this morning's jobs data. We had unemployment fell to 4.3%. and wage growth was stronger than we expected. That is conducive, again, with a Bank of England rate hike, and we did have this big tear to the upside. I think it was around 60, 70 pips we saw in a very short period of time. People are reacting, traders are reacting far more positively to the good news than they are negatively to anything that would suggest a slower rate environment. It gives you an indication as the mentality of traders and what real expectations are.
Understood. Okay, well, let's go look at the Great British Pound against the yen. Which way are the technicals telling you to be at the moment? Obviously, we've got some higher highs, higher lows off a low area. Is this time to be long this contract?
Well, I'm looking at this and I'm thinking in the near term, based on everything we've just said, it seems that traders want to be more bullish.
Yeah.
But in the scope of the longer term, I'm looking at this right now and I'm wondering if there is potential, like with euro yen and like with dollar yen, for a bigger correction to the downside. A lot of positive UK stuff is priced in to an extent. We're waiting for that final confirmation of a rate hike come May, which we may get a strong indication for tomorrow. But we are heading higher, and there's a few key levels which I think are going to be notable, and that's what technical analysis is all about. At the moment, the 38.2 fib around 49.50 is holding firm. That was prior support. I'm looking at that 50 fib more so, around 151, just shy of 151. We've got the 55.89 moving averages, and it's the 50% retracement of the high to the recent low. And then above that, again, 61.8 fib. Anyone who has watched me in here knows that I like to keep an eye on the fibs, especially when they coincide strongly with other technical indicators. And in this case, the 61.8 fib coincides nicely with the initial support prior to the most recent, to that peak. And also the Ichimoku cloud, which typically acts as support and resistance in environments when it is giving strong signals. So we're below the cloud right now. That suggests we've just turned into a bearish environment. If we can get confirmation off that cloud from below and a rotation off of it, then that would be a bearish signal in the short to medium term. So I would love to see us move back towards the 50, 61.8 fibs and get a nice rotation off. And should the Bank of England signal that we are going to get a rate hike in May, and we fail to break through that cloud, then for me, all the good news is priced in. At least all the positive sterling news is priced in.
Yep.
Transition deal, rate hike, higher wages, lower unemployment. All of this is priced in, and yet we're still below the cloud. That for me is therefore a bearish signal rather than bullish.
Okay, so basically we're getting some sort of counter rally below the Ichimoku cloud. So mentally you're thinking I should be looking for an area to potentially go short in this, which would be at the bottom of that blue cloud.
That could certainly be how you could look at this. I would say, given, as I've said before, I can't exactly sit here and give advice.
Yep.
I would be happy to see a rotation off the 5061.8 fib. I'd love to see a rotation off that bottom cloud. For me, that acts as confirmation of that initial break through the Ichimoku cloud. We also had the 200-day moving average broken. A lot of traders pay attention to that 200-day. We are back above there currently, but that initial break could be a nice trigger, a little bit of information, you could say. And I think a rotation off of the Ichimoku cloud or the 50 fib, 55.89 moving average, I think that would be a very nice technical bearish signal, particularly if it comes as the Bank of England signals a rate hike come May. Because what we've got to remember is markets don't always make the moves that they should when the event happens. They do it when they believe the event is going to happen. And if the Bank of England strongly signals a May rate hike and the markets factor that in 95%, then come the actual rate hike, the scope for upside you'd expect be far slimmer, because the markets have priced it in. And that's when you all sometimes see these counterintuitive moves, a rate hike and a weaker pound, because the move is already priced in leading up to the event.
On that note, Craig, thought-provoking as always. Thank you very much for that technical and fundamental lesson, and we'll see you same time next week. That's Craig Erlam. Thank you.